The real money is never found in the index. Over the past few months, US retail investors have been doing something rare. They are pulling away from the broader market. Whether the S&P 500 goes up or down, retail traders couldn't care less. Why? Because they have finally grasped the simplest truth. The broad market is for mutual funds to retire on. Individual stocks are what change lives. Today's market is not short of liquidity or capital. What it is short of is stocks that can tell a compelling story, deliver real earnings, and offer genuine room for imagination. After combing through analyst opinions and applying my own medium to long-term value filter, 3 stocks stand out as having the potential to double in 6 months. They represent the leader in AI infrastructure, the dominant force in AI applications, and the only pure play in the new space economy. All 3 have suffered sharp pullbacks of 30% to 45% over the past few months, not because the companies broke down, but because market sentiment retreated. When panic selling exhausts itself, smart money is quietly moving in. 1. Broadcom, the hidden champion of AI chips. $2 trillion is just the starting line. Let's start with a question. Who is the real pick-and-shovel seller in the AI chip race? Most people will blurt out NVIDIA. And yes, NVIDIA is the GPU king. But even NVIDIA's GPUs need networking. They need custom silicon. They need the whole infrastructure stack. And all of that is in Broadcom's hands. Now look at the data. AVGO just dropped a blowout Q2 earnings report. Total revenue of $22.2 billion, up 48% year over year. Within that, AI semiconductor revenue hit $10.8 billion, up 143% year over year. The first time AVGO has ever broken the $10 billion quarterly mark in AI chips. 143% growth is not a story. It's a money printing machine roaring at full throttle. And that machine is accelerating. AVGO CEO, Hock Tan, gave a guidance that silenced the entire street. $56 billion in AI semiconductor revenue for fiscal 2026, and over $100 billion for fiscal 2027. What does $100 billion mean? It means going from $20 billion in 2025 to $100 billion in 2027, multiplying by 5 in just 2 years. That is not growth, that is species evolution. Who is buying AVGO chips? Google, Meta, ByteDance, OpenAI, Anthropic, every top-tier AI company in the world is lining up to write checks to AVGO. Google's TPU cannot exist without AVGO. Meta's custom silicon cannot exist without AVGO. OpenAI's compute clusters cannot exist without AVGO. AVGO is the one weapon in the AI arsenal that everyone has to buy. Now look at the stock price. On July 6th, AVGO surged nearly 11% in a single day. Yet even after that move, the average analyst price target still sits around $523, implying over 30% upside from current levels. The most aggressive firms are calling for $650. Bank of America and JP Morgan have both reiterated their buy ratings. From $400 to $650, that is 62% upside over the next 12 months. And in a 6-month window, with AI revenue continuing to beat expectations, the Apple mega deal gradually landing, and the $2 trillion market cap milestone approaching, AVGO has a clear shot at breaking through the $500 level first. Now look at the K-lines. After the earnings report, AVGO saw a modest pullback because the market had hoped for an upgrade to the 2027 $100 billion target, but management simply maintained that guidance. Think about it for a second. A company tells you it will generate $100 billion in annual revenue 2 years from now, and you call that a negative? Apple has committed to purchasing over $30 billion worth of AVGO chips over the next few years. AVGO's custom chip collaborations with Google, OpenAI, Anthropic, and Meta are expanding across the board. It is only 5% away from a $2 trillion market cap. Once it breaks through $420, the entire street will be forced to reprice the stock. A double in 6 months would mean the stock reaches $800, implying a market cap of about $3.8 trillion. Sounds crazy? Remember, in early 2023, when NVIDIA's market cap was $500 billion, who would have said it could reach $3 trillion in 2 years? AVGO is walking the same path NVIDIA walked, worth holding and watching. 2. Palantir, the AI giant, down 36%, severely underestimated by the market. If AVGO is the infrastructure of AI, then Palantir is the operating system. What does this company do? In plain English, it turns massive, messy data into actionable intelligence for governments and enterprises. The US Department of Defense uses it to track terrorists. Hospitals use it to optimize supply chains. Car makers use it to manage global factories. Its platform has no garbage zone. You throw in any data, and actionable intelligence comes out. Palantir just delivered one of the strongest quarters in company history. Q1 revenue hit $1.63 billion, up 85% year over year. US revenue alone came in at $1.3 billion, up 104%, literally doubling. Adjusted earnings per share were $0.33, far exceeding Wall Street's expectation of $0.28. Even more critical, management raised full-year revenue guidance from $7.2 billion to $7.65 billion, a nearly $500 million increase. That implies 71% growth for the full year. In the software industry, how many profitable companies can you count that are growing revenue at over 70%? You can count them on one hand, and yet this same company is trading 36% below its all-time high. Why the drop? Because the market panicked, because tech stocks came under pressure in the first half of the year, because investors were selling the fact. The earnings were great, but the stock had already rallied. But did the fundamentals change? No. Did customers leave? No. Did AI demand slow down? Not even close. On July 2nd, D.A. Davidson analyst Gil Luria upgraded Palantir from neutral to buy, raising his target from $165 to $175. Citi went even further, hiking its target from $210 to $225. The average price target across 32 analysts is now $183. And where is PLTR trading? Around $126. $183 implies 44% upside. The most bullish analysts see $255, a 101% potential gain. Now look at the K-lines. PLTR has been repeatedly finding support around the $126 level in recent weeks. Trefis Analysis points out that this same price zone triggered an 18.4% bounce in February 2026 and another 25% bounce in April. The same level, the same story, playing out for the third time. The KDJ indicator shows K at 48.88, D at 47.39, just climbing out of oversold territory. On July 6th, a Wall Street analyst upgraded the stock with a $195 price target, 54% above the current price. What does a double in 6 months mean? It means the stock returns to $252. Its all-time high is $207, so doubling would only take it back to its previous peak and then a modest 22% beyond. For a company growing revenue at 85% and still accelerating, is that really aggressive? Palantir is also working with NVIDIA to provide sovereign AI solutions for the US government. This isn't a concept, it's a contract. This isn't a story, it's cash flow. 3. Rocket Lab, the Mini-SpaceX. Down 45%, and Morgan Stanley just dropped a $293 price target. This last one may offer the biggest upside of the three. Rocket Lab is a space company. It launches rockets, builds satellites, and provides space systems. It is the only publicly traded company outside of SpaceX that offers end-to-end space services. On July 8th, Morgan Stanley did something that made the whole street sit up. They raised their bull case price target on Rocket Lab from $185 to $293. In the report, Morgan Stanley's analyst wrote a sentence that carries enormous weight. Rocket Lab is increasingly resembling a mini version of SpaceX. A $293 target against a current price around $80, that implies over 250% upside. On what basis? Look at the numbers. Q1 revenue hit $200.3 million, up 63.5% year over year, a new all-time record. Even more striking, backlog surged from $1.05 billion a year ago to $2.2 billion, more than doubling. A $2.2 billion backlog means the next 2 years of revenue are already largely locked in. Q2 guidance calls for $225 million to $240 million, another sequential increase of 16%. 63% growth, $2.2 billion in backlog, and quarter-over-quarter acceleration. This is not a story stock space hype. This is a legitimate high-growth manufacturing business. So why did the stock drop 45% from its $151 high? Because the market bundled it with all those pure concept space stocks. Because when the broader market corrects, high beta names are always the first to be sold. Because retail panicked, while institutions accumulated. A 45% pullback is an entry opportunity, not a reason to run away. Currently, the average price target across 17 analysts is $112, and Morgan Stanley's $293 bull case, that is for those who truly see what is happening. From $80 to $112 is a 40% clear upside. From $80 to $293 is a 266% realm of imagination. Now look at the K lines. RKLB has fallen from $151 to $80, a 45% drop that has fully digested the most panic selling. The 12-month average analyst target stands at $108, 31% above the current price. The balance sheet holds $1.02 billion in cash against only $254 million in debt. Cash is 4 times debt. A double in 6 months means the stock reaches $160. Its all-time high is $151. So doubling would only bring it back to that peak, and then 6% beyond. For a company growing revenue at 63.5%, with a $2.2 billion backlog, and called Mini-SpaceX by Morgan Stanley, is that really aggressive? The August 6th earnings release will be a key catalyst. Progress on the Neutron rocket, the integration of the Iridium acquisition, and the conversion rate of the $2.2 billion backlog, any one of these beating expectations could trigger a 50% plus rally. Why now, and why these three? Retail investors are exiting the broad market, while institutions are quietly building positions. This is the classic signal of smart money buying into panic selling. What do these three stocks have in common? First, all three are accelerating. AVGO's AI revenue up 143%, PLTR's up 85%, RKLB's up 63%, all at or near triple-digit growth. Second, all three have taken deep pullbacks. PLTR down 36%, RKLB down 45%, all driven by sentiment, not deteriorating fundamentals. Third, all three have strong institutional backing. AVGO consensus, strong buy. PLTR consensus, buy. RKLB consensus, buy. Wall Street's smartest money is converging on these three names. When three high-growth stocks simultaneously show earnings explosion, plus deep price pullback, plus institutional firepower, history shows only one outcome: a powerful rebound. Let history be your guide, but let these names be your opportunity. Cut through the noise and see the real picture. If you're vibing with this content, smash that like button and subscribe. See you in the next one.